With some signs of stabilization in the housing market recently, a lot of pundits have come out and made predictions about where we're going from here. We're joined today by one of the few people who actually called the housing market right before the crash. We're joined now by Dean Baker. He's the co-director of the Center for Economic and Policy Research in Washington and author of several books, including False Prophets. Professor Baker, thank you for being here. So what is your take on the state of the housing market? Are we seeing a sustainable recovery here?
No, I mean, I think people are saying that just really aren't paying attention to what's in front of their eyes. Of course, house prices were plummeting at the beginning of 2009, and then we put in a series of supports to sustain the market. We had the first-time buyer's tax credit. The initial one ended in November. It was then extended through April, the end of April. That has now ended also. The Fed stepped in and bought up mortgage-backed securities in a huge way, buying up $1.25 trillion worth, pushing the interest rates at times, the 30-year rate below 5%. And then on top of that, the Housing and Urban Development, HUD, came in and played a huge role in the market, basically completely replacing subprime. It accounted for 30% of purchase mortgages in 2009. Now, all three of these are coming to an end. As I said, the first-time buyer's credit, the main impetus there came through the first credit in November. People didn't know it would be extended, so they rushed to buy before that one ended November 30th. But in any case, we now have the second one ending, the extension ending. That means we've pulled a lot of purchases forward. So I think we're going to see a big fall off in purchases the rest of 2010 and even into 2011. Secondly, mortgage rates will rise with the end of the Fed support. They won't go through the roof. Recently, the rates have kept low by the crisis in Europe, which has sent money fleeing to the dollar as a safe haven. But I don't think there's really much doubt that mortgage interest rates are headed up, 5.5%, perhaps as high as 6% by the end of the year. In any case, that's going to be somewhat of a disincentive to buy. And then the third part of that story is that HUD is being forced to cut back their involvement in the market. They lost a lot of money last year. They're below the minimum capital requirement, so they have no choice. So you see an end to these supports. The underlying situation of the market, we know there continues to be a glut. Vacancy rates continue to be at record levels. If we look at rents as another indicator of the tightness in the housing market, rents are actually falling for the first time since we've got measures on this. So the idea that somehow the market is stabilized or we're going to see house prices rising again anytime soon, it's really hard to see any case for that.
Now, given that the government was apparently successful in stopping the collapse in house prices and actually driving them up for a few months, that got everybody thinking we'd hit bottom and we're headed back up, isn't it possible that the government will now just come back in, all guns blazing, doing everything they can to support the market because they're terrified of ongoing falls?
You can't rule that out. I mean, we could have the Fed come back and start buying mortgage-backed securities in a big way. I think they'd be reluctant to do that because of the signal it would send. I mean, it would send this unambiguous signal. Things really are bad, worse than had been advertised. I mean, currently the official line is, well, we're on the mend, things are looking better. If they come back and start buying mortgage-backed securities in a big way, that's saying, no, that's not the case. In terms of Congress extending the home buyer's tax credit or starting a new one since it's now expired, again, they could do that. They swore they would not. Congress has reversed itself more than once in the past. It's not impossible. You do have to ask, though, how long we would think that would go. It's sort of a very strange idea. I used to joke about how we could have a house price support program the same way we have a farm price support program, except it would make a lot less sense. We could do that, but, is that really something we think is good policy? I think it's very, very hard to argue the case that the rest of the country, particularly renters, should be paying, or I should say future home buyers, should be paying to support prices of existing homes so that they could pay more for them in the future. It's a very warped policy.
Right, what, if any, policy measures can the government take at this point? I mean, the talk has died down, but a year ago there was talk about the government destroying homes in areas where there was mass overbuilding. There's been talk about a mass mortgage modification program, which obviously the banks oppose. What, if anything, can we do at this point to prevent further weakness in housing?
Well, I think we have to keep our eye on the ball, what we're trying to do. I don't think the government has an interest in artificially propping up house prices. I used to joke about this being the unaffordable housing program. Why would we want house prices to be artificially high? I mean, if they go high because the fundamentals in the market take them high, fine. But if they're going high because we've had a run of speculation, why would you want to maintain that? Now, we do have an interest in protecting people who got caught up in this buzzsaw. I mean, it was Alan Greenspan and Ben Bernanke's mistake. I mean, maybe they were foolish. They should have realized these people didn't know what they were talking about. But These were the respected leaders of, economic leaders of our country. My own idea is that why don't we give people the right to stay in their home as renters, paying the market rent for a significant period of time, say 5 years, 10 years. They could stay there after they're foreclosed. That helps deal with their issue of housing security. It might also mean that they could renegotiate a mortgage with the banks so they could stay in the home as owners. So that's the direction I would look to go. I mean, trying to prop up house prices, to my mind, just makes no sense.